Are we in a stock market bubble? There's a lot of what would seem to be euphoric activity in the market. And so some folks are asking, are we getting closer to the top? Is the bubble going to burst? Stay tuned, we're going to talk about it. All right, Anthony, so of course it's the dream of every investor, right? We want to take participation in the upswing of the market, but we don't want any of the downside risk. And of course, we know that's not possible. Yeah. But it does have some people wondering, again, seeing euphoria in the market is, are we in a bubble? Is it going to burst? What could that look like?
Yeah, I mean, the question is valid because there is that type of euphoric behavior that is indicative of bubbles. For example, like Elon Musk tweeted out, use this messaging app called Signal, and all of a sudden this stock that was unrelated with Signal in the name gets bid up, people not doing research, the stock price takes off, and then subsequently comes down.
Yeah. Now, when investors, though, are racing into like a stock without doing any research, that can kind of cause pause for concern, and it can be a problem.
Yeah, absolutely. I mean, the technology is at people's hands, so they have their phones out. It becomes almost a form of gambling, and in a way, it is reminiscent of the late '90s, and that's when I started my career when technology stocks really got bid up. The industry as a whole is different at this time because it's a more mature industry with technology. You have a lot of these companies that are much more mature and ingrained in the overall economy, but you still have that type of behavior that's out there.
Well, and I always pause whenever someone says, well, this time is different. Well, of course it is. Every time is going to be different. Nothing looks exactly the same. I mean, things are different now, right? Back in the 90s, trades weren't free. Today, most trades, if not all stock trades, are free depending upon the platform you use. And like you mentioned, there are trading platforms like Robinhood where you just download an app on your phone and people are checking it all throughout the day like they would Facebook or Twitter. So it's incredibly addictive. You get those dopamine rushes, really encourages that gambling behavior. So in some ways things are different. In some ways they're the same, but it takes just a really disciplined approach. Yeah. So as we look forward, right, 2000 was many years ago. Some people have forgotten what that's like or they didn't live through it. But 2000 was painful when that bubble burst.
It was, and because people that really got caught up in that euphoria, if they were overly concentrated, got hit pretty hard. Now, it did affect the overall market, and so a more diversified investor probably saw their portfolio go down in some respects, but being more diversified really was the answer. I mean, shortly thereafter, people would brag about being dividend type investors, blue chip companies, because that was almost like a badge of honor. Like, hey, I didn't get caught in the technology bubble bursting. But that's really where the solution comes in, is being more diversified.
Yeah, and I know there are some proponents that'll say, the general market, the broad market as a whole, like the S&P 500, isn't necessarily in a bubble. In fact, it's doing quite well. What we're really experiencing is pockets of bubbles, and I know like Ben Carlson in his podcast has mentioned that. So, what is your take on pockets of bubbles? Is that actually something we're experiencing?
Yeah, it seems like it, because there are really high valuations in certain areas and then others which seem much more reasonable. But you also have to remember with these big indexes that like, just take technology as an example, and this happened in 2000, is the S&P, so much of it was allocated towards technology, and as that really took off, it became a greater and greater percentage. And now you're seeing something similar. So being diversified is not just, hey, staying necessarily in one index, but really trying to cover the overall market, having some method to your overall plan.
We talk about it all the time, right? Diversification is a key principle of investing success, but it's also more important than ever for people that are retirees or the pre-retiree age, right, heading into retirement. You really need to make sure that everything is aligned, right? You have all of your ducks in a row here as you approach retirement, or like I said, you're in retirement. And these are the things that we help folks with, making sure that everything's aligned. Their investment plan is aligned with their financial plan. If this is something you'd like help with, give us a call, visit our website. We'd love to talk with you.